Hi everyone, my name is Tuesday Victor. I want to welcome you especially for today's Forex and crypto class. Okay, today is going to be very special because I will be teaching a few things which I believe will be of a great help and be a great guide for you, especially in the Forex and crypto markets and looking at exactly what we should be expecting in the incoming week. Okay. So, have you been a profitable trader? Have you been profitable since you started your journey with forex and crypto trading? You're welcome. Now, anyone who joins, please come in muted. Please come in muted so that we do not have or experience interference in the network. Okay, so what are we going to be looking at today? What we're going to be looking at is how to be profitable. Okay. We're going to look at two things. First, we're going to look at profitability, profitability or profitability, and then we're going to look at consistency. Okay, so these are two keywords that has been very challenging. Now I'm going to share my screen. So that whatever I'm typing, you'll be able to see it. So I just wrote down on my notepad that we're going to look at two things. Okay, so I'm going to write it out now as topic for today. Topic for today. All right. So we're looking at profitability or profitability, and then we're looking at consistency. These are the two key things that makes you successful as a trader. So if you have a good profitability or you have consistency in your trading journey, then you can say that you are a consistent trader. So those are the three things we're going to look at. And okay, so starting with let me just run quickly because of time. Starting with profitability, how can you be profitable is the first thing that should come to every trader. How can you be profitable? There are some things I might not be able to say in the course of this class because of time, and one of such is the fact that we are having excuse me please, there's some things I might not be able to say this in this class. Part of those things are some of the things, especially those which I have already stated in our YouTube channel. Okay, like for instance, I taught on a good trading plan. I taught on how to hide your stop loss. I taught on how to manage losses in forex trading. I taught how to trade what ifs, especially when you don't have a directional bias. I taught about I gave you a breakdown of my top down analysis, and then I taught on how to be profitable. Okay, I've done a couple of couple of videos that can help you to be able to deal with a lot of issues in the forex and crypto markets. Forex is not as easy as many people think it is. Okay, it's something that sometimes can be a little bit complicated, but what makes it simple for you is when you have a simplified means of approach to it. It makes it simple for you. So, and some of those videos I've made, you might need to subscribe to our YouTube channel. Okay, and look at these previous videos so that you can be able to watch them and then be able to see some of the videos I've said, and then you can be able to add it up to what I'm going to be saying today. It's just like the progression we made during the review. I already said we're not going to be using indicators anymore. We're not going to be using drawings anymore on our charts. Yes, we could use it for one or two confirmations, but it will not be on the chart. I personally might quit indicators completely, and that's because indicators lag. Okay, it's been very helpful. I cannot say that indicators are not helpful. They've been very helpful, but they lag, and I've gone to the level where I feel okay, I'm going to take a break on this and I'm going to do without it because I can now see their positions in the chart. Okay. Okay, so um, my intellect and understanding about charts will become the closest indicator which I'll be using, and this is because I want to be able to see my candles and I want to be able to catch long moves. I don't want scalping all the time anymore, because I want to grow accounts, I want to flip accounts, and those things you don't easily do them in scalping, because of the risk that is mostly involved if you want to flip with scalping. Okay, when you catch trends, you move with trends, you make more. Okay, and that's our focus for now. So how can you be profitable? You have to look at your risk management all the time. You have to pay attention to your risk management. Okay, your risk management, that entails risk to reward ratio and all that. Okay, you pay attention to your risk management. Okay, then your trading plan. I already taught you on how to do a good trading plan. So trading plan is very, very important. Okay, risk management, trading plan is one of the first key things to consider when you are trying to be profitable. Then that now takes you into consistency, because there are a lot of people who have been with good risk management strategy, and then they have a good trading plan, but they are not consistent at it. So they do this thing maybe on a Monday. That's one thing the human personality is difficult at. The human personality is difficult at repeating the same routine. So it takes discipline for a person to be able to repeat what he is doing. Okay, now if you are not consistent with repeating your activities in trading, then you might not be able to be profitable. Okay, now in measuring consistency, to be good for you to create a journal. Now you can get a journal from Notion. You can download the journal from Notion. What will the journal do for you? Just help you to take record of your entries, and for you to be able to see the ones that were profitable and the ones that were not profitable, and then take cognizance of that. So your journal is able to help you to see if you're making progress. So at the end of the month, you can see your progress, or you can see your deficiency. So that's one of the things that will help you to be able to measure your consistency. So how consistent are you with your entries? How consistent are you with your trading plan and risk management in your entries? Okay, so your journal is very important. You can get that from Notion, like I said. Then for consistency, you have to look at your ability to repeat. Okay, ability to repeat the system, because okay, like we always tell you in risk management, that your profitability is your risk to reward ratio, right? Okay, so let's take, for instance, you take a trade and that trade was not a winning trade, and then you take another one, it's not a winning trade. You need another one that will help you recover the two losses, right? Now if there is no consistency in what you do, that's repetition of taking more entries, then how would you now be able to have chances? So it is the entries. Not all entries must be won, because that's not how the market works. There's some entries that will be a losing trade, there's some entries that will be a winning trade. So which of the entry are you in, and which one are you losing? So it is consistency that tells that, okay, fine, this guy is winning on this particular trade, and this guy is losing on this particular trade. Okay, so if he repeats the losing and repeats the winning, even if the losing rates and the winning rates are the same, you will still be profitable if your risk to reward ratio is not 50-50. If it's not 1:1, if it is 1:2, then that's good. Now if you don't understand what I mean by that, then you need to see our video on good trading plan, and then you need to see our video on how to manage your losses. Okay, so that's where you can get more details on that. So those are the two key things I would love to share with you concerning your profitability and I want everyone of us to. I've given you the main key things which are more important for today's class. The key things are: number one, profitability; number two, consistency. Yes, you might not be rich now, you might not be wealthy now in forex or crypto trading, but you see, profitability, if your profitability is positive, not negative. If it's negative, then you are not profitable. If it's positive, your journal can be able to tell you this. When you look at your journal, you're going to look and see your profits or loss, okay? And then you can know if your profitability is positive. Now, your profitability and your consistency in trading is what will make you big in this industry. So, will make you big in this industry. So, you're trading $100 account, okay? What profit is in that $100 account consistently every month? It might not be weekly because of trading buyers and all that, but when you look at your total activities in the month, what's your profit ability and how consistent were you in what you do? Very, very important and very, very key. So in rounding up with these two things which I decided to discuss with you today, I will just look at the chart and just show you a few on the charts. So right now I'm sharing the notes, so I'm going to stop sharing the notes and then move straight to the charts. That's the trading view charts. Okay, all right. So for someone who is wondering why is he all of a sudden taking off the charts, and why is he all of a sudden taking off the drawings, I've explained a few to you on the review. Okay, why do we have reviews? Listen, the weekly analysis and reviews I do are more like journals. In case you don't know, journals are documented activities that are carried out in a particular routine. Okay, so and those weekly analysis, you see, they are dated every week, and weekly review, they are like journals. Okay, alright, so they might not be written journals, but they are like journals. So what they do is that they help you to be able to reanalyze and be able to review what you analyzed, and if there's a need for correction or changes, you're able to make them immediately. So now, and that's the reason for the few changes. Okay, so but what we're going to be doing, this is how you can easily spot a bias in a market. Now we trade pairs that are correlated to the USD. So because of that, what we do first of all is to study the USD in the last 1 month. We're looking at being profitable in a month, right? So our work is to study how profitable, or rather what move is DXY making in the last 1 month. Okay, so what we do is that we're going to zoom in and look at historical data. Now I'm showing you how to make a clear top-down analysis. Okay, so this data is just it's basically just showing us that it was first here on a downtrend, and did a retest but did not take out this high. So this is a clear downtrend because this high has not yet taken out this high. Okay, so but we're going to take it down to a lower time frame for you to be able to have a clearer perspective on that. So we go down to 1 week time frame. Okay, so when you look at the 1 week time frame, you see that even though it was on a downtrend, like from here to this point, okay, there's a little bit of retracement which is giving a little bit of an uptrend, but has not yet taken out this high. Then you go straight to the 24-hour time frame. So when you come to the 24-hour time frame, what do? You look at the trend again as well. Okay, and then in this trend, you're able to say, okay, fine. Okay, if this is the previous high from this point, and this one took out this high, then this was an uptrend, and this downtrend has not yet taken out this down. So this is in the middle of uptrend and downtrend. So this is more like a range. Okay, then you go down to the 4-hour time frame. From the 4-hour time frame, you're just looking and you're like, okay, so where is this market going to? Now if you look, you see uptrend, low not taking, trying to make another uptrend, and then there's a retracement here. So this is currently a down move, okay, because of the retracement. we go down to 1 hour time frame, and it's also repeated in the same way. You can see it's taking out this low, and currently on this, okay, not yet there, we're close to this low. Okay, so that's a clear bearish move for DXY. So you look at the 15 minutes time frame, which is your entry time frame usually, and you can see this is a clear, downtrend. So when you are now going for any pair correlated to what's it called, USD, like pairs like GGU, okay, GBUSD. So what are you going to be doing? GBP USD should be buying, okay, that's how it is. It should be buying because the other one is bearish. So but for how long is it going to buy, and where do we take our entries is the reason why you have to now come do the same thing you did in analyzing the other market. So you're going to look at it and see, you can see that it was bearish before it didn't take out this high. So it's still a little bit looking bearish in the 1 week time frame, excuse me. So when you come to the 24-hour time frame, you're clearly seeing the range. Okay, now why I'm a little bit concerned about this is that for the first time the 24 hours time frame has taken out this this high for the first time, which it's been ranging on. So it looks like it's coming up to this point, which is a buy. Okay, and it's responding to what's going on with the DXY. Go down to the 4-hour time frame, and you're seeing the same thing. You can see a massive move that's not happening in a long time. This is when it happened here, and then here. From this point it has been selling, and this was why we chose to sell during that last week. We chose to sell, and then price gave us what we never expected. But that's how the market is. So what you do is, don't think you are controlling the market. The market can take any direction. So what you do is, as you are analyzing, you are reanalyzing. So every day before you hit the charts, look at your charts very well, so that you are not carried away by what you said on a Monday. Okay, so you just observe that the market just did this, took out this, took out this, took out this. For me, I was not thinking of buying here because I was looking at a lot of liquidity at this point. This is the place there might be some sells, and here. So that means price might be buying from this point to this point. So that means GU is clearly giving a signal for buy. You come down to 1 hour time frame, and on the 1 hour time frame you see that GU is actually buying. It has taken out all these liquidities, these downside liquidities. Just taking it and it's going up. So like I've already shown you on the 4-hour time frame, it's coming directly to this level. If it takes out this, and it's here before anything like sells. So you come out to your 15 minutes time frame, which is your entry time frame. So what do you do with this time frame? This is where the indicators usually give us a clear entry. Okay, now for you who is following my new system now, which I've told you, no 2 lines that begins the week, okay, like we normally do it. You should be able to know that anything from this side is buys for the week, anything from this side is sells, right? Okay, even without drawing the lines, because we want to free up our charts. Then another thing again is psychological level. You should be able to know the figures when you see the numbers. Okay, you can clearly see them now because everything is clear. This is a psych level, this is a psych level, so you can see those round numbers. Then another one again is the trend line. You can, once in a while we can actually put those trend lines. You can put those trend lines when we want to spot something. You can put those trend lines. But outside that, candle reading we'll have to now do with smart money reading, which is like, for instance, we're looking at this is a liquidity, price coming down. You're looking at break of structure, we're looking at change of character, we're looking at bearish and bullish order block, and then we're looking at fair value gaps, either bearish or bullish. So in that case, in a case like this, you're seeing this order block, right? Then you're seeing another order block here, right? You're seeing order blocks here. Then you are now being able to spot if there is a break of structure before you are thinking of a move. If there is no break of structure, then it could just be a retracement, and you're looking at price retracing on a fair value gap or on an order block, which is these two POIs, before going boot. Alright, so that's the few things I think I would be interested in sharing with you in this particular class. But if for any reason you are having issues with spotting break of structures, order blocks, you can easily still turn on the indicators. I have my reasons why I don't turn mine on for now. When you turn them on, it can be able to give you what you might want to see. Take for instance now, this is the reason why I said I will not turn on my order blocks. Look at now, there is another block at this point which you cannot see using the indicator. If you go down to 3 minutes time frame, you understand what I mean. Now can you see what I mean? Can you see what I mean? Because for price not to come down to this particular order block, there is a reason for that. There's a reason why price couldn't come down. There's a reason why price is doing this retracement. So where will it be going to before coming down? If it will come down, is either coming to this POI or coming to this high. So the first things you should be more concerned about when you want to get your entries from this time frame, if for instance you have taken out, let me remove the indicators. Let's say you've taken out the indicators. These are the things you'll be concerned about. Where are my break of structures, right? These are the things you're concerned about. Where are my break of structures? Okay, where did price break structures, and has price changed character? So you can see the clear break of structure. So in the recent one, these are the previous ones, but in the recent one, has price yet changed character? Because for a constant break of structure on the bull side, the next one that gives you any direction downward is a change of character. So has price changed character? If price has not taken out the previous structure that was broken, let me show you again with the indicator. If price has not taken out the previous structure that was broken, then you cannot change character. Can you see? Price hasn't taken out this structure. So until price takes it out, you can't change character, you can't change direction. So price has to take it out first, then on the POI you can now be able to consider going in from the POI and see how far you can be able to go from there. Now sometimes it's better if you wait for a structure. Please, in our last class, Brother Alex, your mic was unmuted and it was disturbing the class. I didn't know until when I looked at the recording, and that was because I was using a microphone, so I couldn't really hear it. So please, I would like you to stay muted, except maybe you are unmuting your mic to speak. Otherwise, it will serve as an interference. So that's the basic thing we're looking at today. So that's the basic thing. So I would prefer, these are some of the things that will give clearer confirmation so that you avoid taking entries that will be losing entries. If you have a change of character like this is not even a change of character. See why we are careful with looking at these things by ourselves. This is an indicator's change of character and can be a fake change of character. I would prefer anyone that takes out this previous break of structure. There is no break of structure here, so why would this be a change of character? So pay attention to these things. So this down move, or sorry, this recent low should be able to take out this previous low before you can say there is a change of character. So that makes it valid. If it doesn't, then we are still on a bullish move. So what do? You wait for this bullish move to take out this high, and then you wait for the POI to keep on going on the bull side. So these are the little corrections which I think we should make, and we have already made during our review session. So if you haven't watched or seen the video of the review session, it's a simple thing. It's on the YouTube channel. Yeah, it came a bit earlier because I was doing quite a number of things in the middle of the night, and I was awake around 2 a.m. Awake till like 7 a.m. this morning, so I was able to do that review session by 4 a.m. So by 4 a.m. I did that review, so you can make reference to the video if you want to see the video. So that will be all on what I will be teaching you today. Sorry if you came in late, then you might need to see the video of this class, which will be posted shortly on YouTube and Facebook, so you can make reference to a few things we've said. But if you have a question, you have a contribution, and you have a suggestion which you'd love to say, over to you. You can unmute your mic and do that before we close. I just wanted to have it in mind that the time of this meeting will soon be up. So I think we have about 12 more minutes. So let's use that to take questions, contributions, and suggestions. So it's over to you right now.
No question for me, Professor.
Yeah, good afternoon, Heraclitus. Good to see you.
Yeah, I said no question from me. No.
Okay, I didn't hear you very well. Good afternoon. Alright, well done. Thank you so much for making our time to join this class. And thank you for always being consistent with joining our classes. It just shows that you are very, very resilient and very interested in what we do. And I believe in a short time your hard work will pay off. Because no matter what, the difference between those who join meetings and those who don't join meetings will show in a matter of time. Or those who join classes, those who learn and those who don't learn, to show in a matter of time. So in absence of any question, contribution, or suggestion, I'd like to close the class for today, and then upload the video for this class on YouTube and Facebook, so that for those who were not in this class, they can be able to have access to what was discussed and learn a few from it. So thank you for not asking any question, Heraclitus, but I want to be confident that you are good to go for the coming week, since you don't have a question. So that means you are good to go. That's the right word. So I'm looking at you being very profitable in the week. I'm looking at you making quite a lot of money in this week, right?
Yes, sir. Yes, sir.
Okay, so I wanted to flip those accounts. I wanted to make big profits in those accounts. So, but in as much as you're trying as much as possible to make this money, don't be greedy. Remember, risk management first, having a good trading plan first, so you're not anticipating the big money and then forgetting that there are times when you are not on a winning trade and might be losing. Okay, so you don't lose more than what you made, and then you are now not profitable. So lose less and gain more. Okay, pay attention to your risk to reward ratio, so that you can always be highly profitable. So I'll be looking forward to having us in the weekly analysis session, which will be Monday morning. Then next week Saturday, I don't know, we're going to look at our schedule, but if it's fine, next week Saturday I'll be looking at one of us probably moderating the class for next week Saturday. I want one of us to be able to teach a few things.
Alright, sir.
Now, you don't need to know all, but the little one you know, I'd like you to teach, okay? So that you can, as you're teaching, more knowledge is coming to you and you're perfecting the knowledge you have already in the Forex and crypto space. So I'm looking out for one of us. So in the course of the week, I'm going to get your schedules and know how it is, so I know who exactly will be doing that for us in the coming week. Then just as we discussed in one of our special meetings, then I will be needing whoever it is. I'm going to let you know. I'll be needing the person's maybe professional photograph, so we could use for the sake of recording and editing of the class. Okay, for those who are going to be watching later on Facebook and on YouTube. So, but that'll be all for today. So, I'll be looking forward to having you on Monday. Have a great weekend and have a great week. See you
Thank you so
soon.
much.
You're welcome. God bless you.